Today is March 14th, Saturday. I am Cindy Fintech, and here is the weekly overview of the market. Over the past 80 years, wars that caused oil shocks have been brutal for the stock market. Nearly every time, they triggered a recession and a major sell-off. Even Russia's invasion of Ukraine in 2022 coincided with a bear market. So here's what's surprising. After the recent attack on Iran, the stock market barely flinched. The S&P 500 is still within 5% of its all-time high. Clearly, the market thinks this time is different. And in several ways, we agree. First, the world entered this conflict with too much oil supply, not too little. That's why oil prices have only gone up about 40% so far compared to much sharper spikes in past conflicts. Second, this is happening during a business investment boom, especially in AI infrastructure and a potential manufacturing rebound. These forces, plus anticipated government stimulus, have kept stocks strong despite massive rotation beneath the surface. That said, while the earnings outlook remains solid and we're still picking stocks aggressively, we see risks the market isn't pricing in. U.S. debt and deficits are concerning. The consumer is still fragile, and we could see inflation pressures outside of energy start building. The odds of a boom-bust cycle in the next 12 months are rising. This is a time for extreme vigilance. You need to balance offense and defense. Here's what we recommend. Focus on U.S. companies actually delivering earnings, not overhyped stories. Play offense with oversold large-cap stocks that have strong fundamentals, including select mega-cap financials, healthcare companies, Magnificent Seven stocks, and quality software businesses. Industrials and materials stocks remain cyclical winners. Fund these positions by taking profits from consumer-focused sectors. For emerging markets, focus on Latin America over Asia. Keep defensive allocations in hedge funds, gold, real estate investment trusts, and infrastructure. Here is the bottom line. While parts of the U.S. economy are strong, investors need to reassess risk on at least two fronts: consumer resilience and U.S. government debt and deficits. Bond markets seem to be taking both seriously. Stock markets seem to be swinging between extremes. Balance offense and defense through aggressive stock selection. It matters now more than ever. Watch three things: how long the war lasts, gas prices at the pump, and how many countries get involved in the conflict.